Good morning and welcome to today's webinar. My name's Joanne Trelagan and I'm the Marketing Manager at AFTA. I'm joined with Dean Long, who is here, and Dean is our National Manager for Strategy and Policy, and he'll actually be your host for the webinar today. But before we get on to that, I'm just going to give you a little bit of an update and some housekeeping. So firstly, I'm really pleased to say that we have had a record number of nominees for this year's National Travel Industry Awards. So we have had over 1,000 travel industry representatives, both travel agent and suppliers, nominated into the awards. And we're currently going through the process of validating and contacting nominees, and we'll officially make the announcement on Monday, the 13th of March. So thank you to everyone who nominated someone or participated. It's going to be a really exciting year, and the event will actually take place on the 22nd of July at the brand new International Convention Centre in Darling Harbour, and can I just say it is fantastic. So we're very excited to host the event there this year. Just some housekeeping. This session, as always, is recorded, so you can jump online at afta.com.au and rewatch it at your convenience. Every single webinar that we've ever had is hosted online so that you can revisit it and even share it with colleagues if you think it would benefit them as well. The audience is on mute, but of course your questions are really important to us. So we will have a designated time at the end where you can use your question toolbox to type in a question and we'll answer that. And if we don't get around to answering your question, you can simply email us at afta@afta.com.au. So we'll also have that email address at the end of the presentation so you can write that down and contact us. And finally, we do ask that you please fill in the survey at the end of the webinar, and that just really helps us make sure that our content is relevant for you. So I'm going to pass you over to Dean now, and really pleased that you can join us today.
Thanks, Joe. Good morning to some, good afternoon to others, and good evening to the international participants that we've got on the call today. I just want to start by just reiterating what the email stated, the follow-up email to everybody that registered today, which was this webinar is focused at a group of people that have an understanding of the terms and references that we use in the payment space throughout time. So I really hope everybody has watched the webinar we conducted last year, which was a requirement to join us on the webinar today. So we won't be rehashing all the elements of that. There will be some parts that we will go over because it's pretty important, some of those areas, to make sure we get them right. So today we're going to focus on what's been announced since October 2016, and we're going to have a quick look at what the acquirers have said in the marketplace, and more importantly, some of the intelligence AFTA has been able to pick up through some of those discussions. What it means for your business and what the changes are and how they're going to impact you. Establishing what your new surcharge rate will be if you choose to do a payment surcharge. And importantly, because we have a lot of questions on the last lot of webinars that we couldn't get to, we've got some extended time for questions. So I'm hopeful that we'll be able to answer everybody's questions and we'll get some group learnings out of those activities. So let's start with the past, future, present, where we're at, where we're going. So large businesses had to comply with the new surcharging regulations from the 1st of September 2016. And you would have seen an example of this with Qantas, where they moved to a percentage-based surcharge rather than the fixed fee that they've been charging for a number of years from there. Some of the interesting insights that came from that is that to date the ACCC hasn't made any public announcements of breaches of the Act. With conversations with suppliers, they've seen a decrease in the number of complaints about surcharging in regards to credit cards. But importantly now, we're up to the point where small and medium-sized businesses are next, and this webinar is going to be focused on what you need to do to be compliant by the relevant deadline of the 1st of September 2017. So for those that watched the webinar, you'll see this timetable from the previous webinar, and you can see that the 1st of September all large businesses had to comply, and they've been doing that ever since. We've been advised that the cost of acceptance statements, which were previously called annual statements, will be sent to all merchants by the start of May. Now, if you haven't received your merchant or your cost of acceptance statement by early May, I would really recommend getting in contact with your business development manager at the bank or your acquirer or your payment facilitator. The other important aspect that is coming into effect on the 1st of July this year is the lowering of interchange rates. And that means that there's going to have downward pressure on what it costs you as a merchant to accept credit card and debit payments. And so all of those aspects will come into effect on 1 July this year. And the old days of setting and forgetting your surcharge rates cease as of 1 September this year, and you'll need to review them every year between the 1st of July, so the 1st of June, and have them set for all transactions on the 1st of July of every year. So what's surcharging from 1 September 2017? All travel agents charge a surcharge when a customer pays using a credit card. Most, however, do not for debit or prepaid cards. With this in mind, most consumers are aware and accept that a surcharge will be charged when booking travel. The new regulations detail that you only charge the amount it costs you as the merchant. This means that each cost must be documented and should not include any internal costs. Secondly, and this is important, you can no longer average across card schemes. In the past, this has been common practice for all Australian retail outlets, including travel agents. It made it for easier interactions with consumers and bookkeeping to have one surcharge for MasterCard and Visa or one surcharge for Amex and Diners if you accepted it. From the 1st of September, if you wish to charge what the true cost of acceptance is, you'll need to charge an individual rate for each card scheme that your business accepts. Now, I will go through in more detail about this in about 5 minutes, but the important aspect here is that if you wish to charge the true cost of acceptance and surcharge that, you need to have individual rates. The only way you can have a blended rate, which is the word used by a number of different merchants and travel agents, is that if you pick the lowest rate. And again, I will go through this in much more detail in about 5 minutes' time. So let's just have a quick look at what the 5 permissible costs are that you can include in your surcharge rate. A payment surcharge applies to particular types of cards that the merchant is accepting. It is not your service fee that applies to all payment methods accepted by you. Only the following costs can be surcharged. All costs need to be provided by an external provider and must be documented. So let's just go through these about what will be presented on your cost of acceptance statement. Merchant fees. This is the fee the bank charges to accept a payment by credit or debit cards. Terminal rental and servicing. The fee the bank charges you to rent the merchant facility, both physical and online, and to maintain this service. Gateway fees. These are typically fees for international services, switching, and that's the system that transfers the money in the back end. All of these items would be on your cost of acceptance statement. The remaining 2, fraud prevention services and cost of insurance for forward delivery risk, would need to be provided by an external provider. Now, for the cost of fraud, the cost of fraud prevention services, is what it costs you to manage the risks. So do you have a system running on your website or the link that you send your consumers to make sure that the person is using the right credit card and not a stolen credit card? That could be a cost that an external provider could provide a service for. For forward delivery risk, there are opportunities to buy insurance or relevant products that could offset your forward delivery risk, and if that can be documented and it is an external provider, can be included. So of the 5 permissible costs, 3 will most likely be provided by your acquirer in the form of a cost of acceptance statement. And the RBA has mandated here that each merchant, and I quote, an easy to understand statement which clearly describes the merchant's permissible surcharge rate. So in plain English, your acquirer, your payment facilitator, anybody that provides you with a merchant facility to accept card payments will need to provide you an easy to understand cost of acceptance statement. And we do have an example coming up next on the next couple of slides. For the two remaining costs, fraud prevention services and the insurance of forward delivery risk, it is unlikely that acquirers will offer you these types of products. So you'll need to find an independent provider for these services, which will require you to establish your own surcharge rate. But let's just go through these in a little bit more detail about what they mean. So merchant service fees. The RBA has detailed that merchants should see a reduction in merchant service fees due to the capping of interchange fees. Importantly, for travel, corporate cards, which will be included in this cap, will see a reduction in some instances of more than 1%. For consumers, reward points per dollars spent could be reduced and annual fees may be increased. And the RBA believes this is really important because it's educating the consumer on what the cost of acceptance truly is when they choose to pay via a credit card. So the cost of acceptance statement, what are some of the items that are going to be on here? So your acquirer has to provide you a cost of acceptance statement. It will detail the exact amount that you as a merchant can charge. And the example here, which is highly stylized, shows that for the previous 12 months, this merchant had 369 transactions with people using a MasterCard credit, 200 transactions on a MasterCard debit, and you can read yourself on the screen. And what this acquirer has said is that the merchant service fee as a percentage is 1.1 for MasterCard credit, 0.1 for MasterCard debit, 1.2 for Visa credit. And you'll see here down the bottom that there is also an annual statement from American Express. This is an important clarification. For those businesses that accept American Express, you'll know that you have an independent arrangement with American Express outside of the company that provides you your merchant terminal. So if you accept American Express or Diners Club, expect you will need to have 2 annual statements or cost of acceptance statements with that. But the same information will need to be presented. Of particular note for American Express, the only American Express card that is covered by the changes to the law is an American Express companion card. And I'll just pause here for a second to ensure that everybody understands what an American Express companion card is. An American Express companion card is an American Express card that is issued typically by a bank. So some people around the country would have a home loan with the Commonwealth Bank. With that home loan, you may have been offered a deal to get an American Express card issued through the Commonwealth Bank. So when you look at these companion cards, what they will have on it, they will have the blue Amex box that we all know, but on the card it will also have the brand of one of the big 4 banks or a credit union. And that is how you can differentiate between an American Express companion and a standard American Express card, or the green card, or the black card if we're really lucky. So what are the cost of acceptance statements? What do we think this box is going to look like? So this is an example that has been provided by one of Australia's major acquirers, and you can see here that this would be located at the top of the statement. So for Visa credit, it provides exactly what you can pass on to the consumer. So in the past, you may have been able to add up the Visa credit, Visa debit, MasterCard credit, debit MasterCard, EFTPOS, Union Pay, and come up with an average rate and applied that to all card types. Under the new arrangements and the new regulations, if you were to have a blended surcharge, in this example, you would only be able to surcharge 0.13% for all payment types. And that's really important because you cannot charge someone who wishes to use an EFTPOS card the same rate as someone who anything more than 0.3%, and that is regulated. So that's really critical. If you blend, you have to blend to the lowest possible rate. You cannot average. Some of the other important information on your cost of acceptance statements will include all the things that we've mentioned. It'll contain information on Visa, credit and debit cards, MasterCard, credit and debit, and companion Amex from a statement from Amex. The other important fees, merchant service fees, terminal rental, international transaction fees, and gateway fees will also be included in this statement. So fraud prevention services. All businesses have some risk of fraud. However, some online businesses have a substantial risk of fraudulent transactions. This is because, unlike bricks and mortar agencies, where you physically see the interaction with your customer, online businesses rely on other checks. Therefore, online security programs and security specialist services are able to be included in your payment surcharge. So on the screen we have listed 8 common fraud examples in Australian businesses. However, only some of these can be included in your payment surcharge. So when we look at the 8 risks that everybody faces in their business, you'll see there's probably only 2 that can be included in your payment surcharge because they are directly related to the cost of acceptance of a credit or debit card. And so those are card not present fraud or electronic payment method fraud. So let's just have a quick example of each of those. Card not present fraud. Someone has stolen a credit card from a person in the street and they've gone online to your website, they've booked in airfare using the stolen credit card. The person whose card was stolen calls their bank and advises the bank that their credit card has been stolen. That is fraud. And that will involve, and therefore you may want to have checks and balances in place to ensure that that doesn't occur on your merchant terminal. And any electronic payment method is let's say that someone has taken a prepaid card and has changed their numbers around on it to utilise a different account number. And you swipe the card and everything goes through correctly, but when it gets to the bank and they do their regular acquittals at the end of every day or at the end of every 3 days to remit funds, there's a discrepancy. Well, that's an example of fraud, and therefore services that you put into that, this is an external to your business and you can document it, can be included in the surcharge. However, with these risks, they are primarily found within the online travel agent business. So if you're in bricks and mortar, because a customer has given you their passport details, where they live, their addresses, all those type of informations, the risk of fraud from the consumer is limited. It's never 100% removed, but it is definitely reduced. Forward delivery risk. This is the major risk for all travel agents, and again we spoke in detail about this in the past webinar, and I'm not going to go over this in any more detail other than to say that importantly the RBA have announced specifically that insurance or other related products that allow a merchant to mitigate their forward delivery risk is a direct cost of acceptance. This is because this risk for the merchant only occurs when a consumer is choosing to book using a credit or debit card. You may remember in the previous webinar that this was a major reason why some travel agencies had issues getting access to a merchant acquirer. AFTA is currently in discussions with all the major acquirers on what an insurance product or other product may look like, and how that will impact a merchant's ability to mitigate their forward delivery risks. Now, what does all this look like with all this information, and how do you work out your new surcharge? You will need all of the information that we've just spoken about. You'll need your annual cost of acceptance statements from your acquirers, and remember that if you accept American Express or Diners, you'll need to have those statements with you, and you'll need receipts from your service providers for the electronic fraud prevention or forward delivery risk insurance. Now let's have a look at how this may look out in regards to how it plays out when you wish to start establishing this, because since the last webinar, we've definitely seen the market move, and there are a number of products out there that could be purchased, and there's different ways that each of the suppliers are charging merchants. So let's look at hypothetical example 1. And again, for those who watched the webinar, you'll see this is the same slide that was presented before. And I'll say exactly the same important issue here, these are hypothetical. These numbers have no base in reality. They're purely here as an example. So please no one go to an insurance provider and say that I was told on an AFTA webinar that I could get a fraud prevention service for $3,000. There's no real world relevance to these numbers. It's purely here to demonstrate to you what it would look like and how you would work out what your surcharge would be if you chose to do it this way. So as I said, you can see here you'll receive an invoice or a receipt from your provider that would contain an Australian N number. You would have the service delivered on that invoice or receipt and the coverage period for which it's meant to cover you, and it would provide the cost. You'd have exactly the same situation for forward delivery risk insurance or whatever product that may be in the market. As you can see here, the total cost for that is $5,500, and this was the one way back in October that we were told they were going to look at this. So this meant that for most merchants, there was a lot of work to be done to work out how you would establish your surcharge. And so we're going to go through that in detail now. So what you need to do is, and you remember in the original stylized annual statement that I showed, that your acquirer has told you how many transactions took place on using a Visa MasterCard or a Visa debit card. So you would divide the total cost of fraud by the number of transactions, times it by 100 to get a percentage, and the same for forward delivery risk. Now these slides will also be available from afta.com.au following this webinar. So these will be here, you can come back and refer to these later. So let's use the example. We have $3,000 worth of fraud prevention services. There's $1 million worth of transactions that are taking place on that. So we've worked out there was 700 transactions. We've worked out how many of those, what the value is. We received that value. We times it by 100, and we've worked out that for all of our services of fraud prevention services, you will be allowed to increase your surcharge rate by 0.3%. And exactly the same process for forward delivery risk. And again, these numbers are hypothetical, just here to show you the process and the system you should use to establish your surcharge rate. Now, what you need to do is add those together to get your new surcharge rate. So you take the cost of acceptance statements, you add your fraud prevention services that you have, you then add your forward delivery risk insurance or other products that you've managed to buy, and this will establish your new surcharge rate. So let's use the MasterCard credit example here. We have a cost of acceptance from the statement of 1.1, fraud prevention services was 0.3, FDR insurance was 0.25, which means your new surcharge rate for MasterCard credit is 1.65%. And you are then legally able to ask, if a consumer wishes to pay via a MasterCard credit, you are then legally allowed to charge them 1.65%. The big change that's happened over the last few months is that a number of providers have come to the market and said, well, we actually don't want our customers to have to go through and work out how many transactions they had, what that looks like. What we're going to base our business model on is charging the merchant a fixed rate on a transactional basis. So the only change from the external provider 1 to external providers 2 is the fact that the cost is charged on a transactional basis. So they've said, we wish to know how many transactions you did. You did 700 transactions last year. We believe we can provide you a comprehensive fraud prevention service of 0.1%, and you apply that to your surcharge. So again, what do we have here? 0.1% for fraud prevention services, 0.3% for forward delivery risk insurance. So all of those levies put together equals 0.4%. And so what you don't have to do here, you don't now have to divide by 100 and work out all these other aspects. You simply add them together. So you get your cost of acceptance statement at 1.1%. You then add your fraud prevention services and your forward delivery risk insurance, and you get your new surcharge rate. So both options are available to you, and you as a business will need to work out which one best suits your business model. There's no right or wrong, as long as it's documented and as long as it's an external provider and you haven't included any costs you are able to provide that in your payment surcharge. So let's just have a quick look now at how that would work in reality if you decided that you wanted to charge different surcharge rates for each payment type. So what you would need to do is you need to complete it for each card scheme and for each card type. So that means if you have a MasterCard debit, you would need a surcharge rate for that. If you had a MasterCard credit surcharge, you would need a rate for that, and vice versa. Where I will point out is American Express, and again, because American Express has a different business model to the other card schemes, it's really important you know what the difference is. American Express companion cards, which are the ones issued by the bank, remember the ones that have a Big Four bank logo in the corner or a credit union logo on there, those particular cards are regulated by these changes. But American Express has other cards, such as an American Express corporate card, a green card, a black card, a gold card. All of those American Express cards are not covered under this payment regulation, under these surcharging regulations. Now, you can decide across these different payment types that you don't want to have 7 different surcharge rates for your customer. You may decide what you want is that you want to have a single rate for all payment types. But that is 100% permissible, that is fine. But what it means is that you as a merchant agree to carry the costs for the higher paying cards. So if you have a single surcharge rate for MasterCard credit, MasterCard debit, Visa credit and debit, and American Express companion, you will need to charge at the lowest possible rate. So if we go back to that original cost of acceptance statement there, the lowest fees you're being charged by your acquirer was 0.13%. So you'll have the surcharge for all payment types here will be 0.13%. And that's not including any fraud prevention services or any fraud delivery risk, which you can add on to that, but that's only if you have those costs within your business. So remember, you will need to set your new surcharge rate for 1 September this year. And remember what you'll need your annual cost of acceptance statements from all your acquirers, including American Express, and any receipts from your service providers for electronic fraud prevention or FDR insurance. That information is going to be critical for you to comply with all the new regulations going forward. Quick summary. You'll only need to review your surcharge rate every year, once a year, that is it. Only charge what you can prove. No internal costs can be included in that. So make sure that you've got your receipts, make sure you have your merchant service fees, all of those aspects in a folder. So if the ACCC, if there is a complaint from a consumer to the ACCC, you have all the information there that you need to justify why you're surcharging at the rate that you have. And importantly, it's only February. You've got 6 months until the new laws come into effect. So take your time, ask lots of questions, and you'll be 100% compliant with the new laws when they come into force. So now we're moving on to our extended question section. So I'm 100% here to answer as many questions as you've gotten. I'm going to throw back to Joe to help me out here. So I'm just going to put Joe on now, and I'll be able to try and answer as many of the questions as I can.
Yeah, great, Dean. That was very informative, and I know I personally learn a lot. I have a quick question. You spoke about how the Amex Companion card, which would be issued by one of the big banks, needed to apply to the regulations. But you made a statement about the standard Amex card issued by Amex. Can you just explain that?
So this is probably the trickiest part of all these regulations, is because only part of the business model of American Express has been regulated. There's a large portion of their business that is not. So if anybody walks in with an American Express card or wishes to transact over the phone or whatever that might be, using a traditional green American Express card, the ones that were around, have been around for a number of years, they are not regulated. They are not regulated anyway. In fact, they sit outside the traditional regulatory environment. So it's it is a little bit confusing, there's no doubt about that, but the main check that I would do if I was a travel agent is I would ask to see the card. Ask to see the card and look for one of the brandings of the bank. If it only has American Express branding on it, or it's a China Union Pay card, none of those cards are actually included. So if it has the branding of a MasterCard or a Visa, or it has an American Express card with a logo of a bank or a credit union, then those cards are regulated. If it's just a straight American Express card, those cards are not regulated, and it's up to you as the merchant to negotiate your rates and what you wish to surcharge with American Express.
So we have a question here, and I guess it's a really good one, and it goes back to the Amex Companion and an Amex issued card. If they're making the booking online, and they don't actually physically see it, how do they know what amount to charge?
So that's a really good question there, and it's one of the biggest weaknesses to these regulations in regards to the recognition of card types. It's critical that you contact American Express and find out what service they are going to provide to you to allow you to tell the difference in those cards. Now, American Express cards that are the normal green card have a certain set of numbers. American Express companion cards also have a certain set of numbers. So if someone is transacting with you via an online portal, it's making sure that the online portal you have are able to recognise what the difference is so you can apply the right surcharge. And that's very important in a card not present environment such as online sales.
Do you think as well some of the merchant portals online would have something built into them to help know which type of card it is?
There's definitely a number of providers currently in the marketplace that would allow you to automatically identify what the type of card is. Unfortunately, if you have a merchant facility or an online payment portal which is provided by the Big Four banks, it's highly unlikely that that service will be available by the 1st of September. So you may need to look at contacting a payment facilitator to actually upgrade the service that you're getting to ensure that you can comply. But it's important with all these things. There's a number of providers in the marketplace currently, and I'd really recommend you, rather than be loyal to one particular bank or one particular payment facilitator, shop around, get the best deal for you, and you'll find that a number of the smaller operators in this space, and I won't mention them by name because I don't want to give them a free kick, but it's very easy to Google Australian payment facilitators and you'll be able to see there's a number of players out there, and that will definitely give you the best chances to comply with the new regulations.
Yeah, great. Well, you're getting lots of positive comments, Dean, saying that was very informative. This is an interesting question. We've got a travel agent here that actually uses a foreign merchant facility, which means that their head office in Europe actually incurs a merchant fee. So if they're transacting out here, is there clarity around whether it's illegal to add a merchant fee here, considering they're not actually incurring that cost here?
Yeah, the new regulations are very clear, and it's actually, if you wish to take the time and find some good bedtime reading material, some of the suppliers definitely identified this as a risk and a competitive disadvantage that they're at in regards to the surcharging. These regulations only apply to transactions that occur within Australia. So that means if your merchant facility is in Europe, it shouldn't be affected by these changes. But given the particular circumstances of your business, I would recommend that you seek legal advice on that to ensure that is accurate. But based on the limited information that I've gotten here, it would appear that you are not bound by the new surcharging regulations. Also, in return to that, is that what you may find is that if the rest of the marketplace has moved to a lower surcharge rate and you are still at a higher rate, there is a potential that a customer may choose to go to a different agent. So just bear that in mind, that there's a number of competitive pressures here outside of the standard regulations. But again, these are business decisions which you will need to make going forward.
Thanks, Dean. Are there any other questions? Sounds like you did a very informative webinar. So again, guys, this will actually be online. So if you think of any other industry cohorts that might find this valuable, please share the link. And again, you'll actually get a survey to fill out, and that just helps us finesse and improve our webinars, and also you can put in any topics that you'd really like to learn about. So we might just wait a few more minutes and see if there's any other questions that come through.
While we're waiting for any other questions, I just really think it's important that I, again, just provide some additional information in regards to the averaging versus blending versus what you can charge and when you can charge it. You can no longer average out your costs across the card schemes. That's really important. So you can't have an average, but there's nothing stopping any merchant from surcharging at the lowest possible rate that you are charged. And so it's a really important clarification to make. There was a number of questions in the last lot of webinars from that, and also following that in offline conversations. So again, you can no longer average. That if you wish to have a single surcharge rate, you can. It just needs to be at the lowest cost of acceptance.
So actually that's a good point, because we had a question here from Sean saying that if you don't charge an FPOS surcharge, but you know that MasterCard is 1.6% and Visa is 1.5%, then yes, you can just charge 1.5 across the two cards because that's the lower of the two rates.
Absolutely, that's spot on. And it's important for FPOS transactions as well. They actually are not covered within this, but it is the cheapest form of acceptance, and unless you actually have the technology to differentiate between those cards, you would have to go and the example in our cost of acceptance statements of 0.3% or 0.13%, because that's the lowest cost of acceptance. But you're absolutely spot on there, Sean. If you have the technology to know the difference between a MasterCard and a Visa card, and the MasterCard is at, I think you said 1.6, and the Visa is at 1.5, and you wish to have a surcharge rate across all Visa and all MasterCard at 1.5, then that's 100% acceptable. Where it starts to become tricky, and this is an important segue as well, is that MasterCard and Visa also have prepaid and debit cards. Now, and I think at those rates you're referring directly to a credit card. Now, it will cost you less to accept a Visa debit card. So it's very important that you have the ability to differentiate between the cards. And in a card-present environment, i.e. in a normal shop, you can look at the card and go, oh, that says Visa debit. I need to make sure I'm not going to surcharge that, or I'm only going to surcharge that at the lowest, whatever it's going to cost. And it's the same with credit. So just make sure that you've got those things in place, so that way you're 100% compliant.
And when you say debit, Dean, is that when someone hits saving, like the savings option, so they've got the money in the account?
Correct, yes. And probably just also, if you're in a card-present environment, if someone is handing you a debit or a prepaid card, do not allow tap and go. If someone taps the terminal, even if they enter a PIN, it will be transacted as a credit transaction. So it's really important on those debit and prepaid cards, if you do not want to be charged the additional fees that are applied to credit cards, you need to get the consumer to insert that card into your terminal.
I guess that's like when I go to Woolies and Coles and I want to get money out, I can't tap it to get it out and hit savings. I actually have to insert the card, hit savings, and put my PIN in to make sure that it's a debit.
Exactly.
Okay. So we have a question here from Tanya, which is quite interesting, because she's saying that you might have a Visa card, but various banks will charge varying percentages to have that card. So I think the answer to that question is actually related to where your merchant facility is linked with.
Yeah, absolutely. That's a really good question. One of the things we covered in the webinar previously is how the cost of acceptance to cards will come down dramatically as of 1 June this year. The new surcharge rates the new merchant service fee rates come into effect. So currently, as a small or medium-sized business, you would have a Visa card. We'll just use Visa for this example, a Visa credit card. So this is the example. You'd have a Visa credit card that would come in, and you may have 20 clients that come in with a Visa credit card. One might be a Platinum Qantas Visa card credit, and one might be a low-cost CBA Visa credit card. Now, you as a merchant will know that the Platinum card, Qantas Platinum card, not picking on Qantas, just using it as an example of a common card that's in the marketplace, that's going to cost you more than the low-cost Visa credit card. And that's because of the way everything was regulated before. Because the regulations at the back end of the card payment systems have all changed, all of those fees will come down dramatically and you won't see the large fluctuations within the back end. But I did go into a lot of detail about that in the last webinar, so I would really recommend you go back and have a look at that. And if you've got further questions, more than happy to take a call from you.
Yeah, great. Thanks, Dean. I hope that answered your question, Tanya. I'm just going to read a couple of other questions here. So this is interesting, and I guess this comes down to your relationship with your customers, but we've got a question about if a client pays via Visa debit, or how do we know if it's actually a Visa debit or a Visa card if they're paying over the phone? Just as an example, like the customer could lead us astray.
Yeah. Oh, look, and that is absolutely a risk. There's no doubt about that. The RBA has clearly stated that this is a weakness of their regulations. We pointed it out in every submission and in every meeting that we had with them, including the government, of which they went, well, that's not our problem, which I found quite ironic. And look, they did actually identify that it was a problem, but they can't fix it because the technology is so dated. What I would do is I would ask the customer, what type of card is it? Is it a debit card? Is it a prepaid card? The other aspect of this, and what I would definitely look at doing if I was running a travel agency currently, is that I would actually start to stop taking over-the-phone transactions. There's the level of risk to you as an agent that you're exposed to in fraud, in not knowing what surcharge to apply, in a whole lot of different aspects of it. Even if you've been doing business with them for 20 years, there's a whole lot of things you're exposed to in the back end which you really shouldn't be. So what I would probably do is start to have a chat to some of the many payment facilitators in the market about how can they provide you an online payment portal that you can send a link via an email, via your website to go, here is, your bill is this, and you need to pay via this means. And that's going to be the best way to protect your business, yourself, and also ensure that you apply the right surcharge. But you're 100% spot on. If you still wish to take transactions over the phone and manually enter that into your terminal and process a payment, you're 100% reliant on what the customer tells you. And what I would do then, if someone has told you it's a credit card and it worked out to be a debit, I would simply write that down on the file, so when the ACCC, if the ACCC comes to you following a complaint by the consumer, you have that information at hand and you can demonstrate that best endeavours were taken.
Yeah, great. We just have another question from Linda relating to that overseas transactions. So they also take payments from credit and debit cards from clients in New Zealand. And do these new rules apply to New Zealand transactions? No,
any international card, and that is, so New Zealand is a good example. If someone is, let's say that you've got a travel agency near a university and you have a high number of international students there and they're paying using their New Zealand credit card to go up to Hamilton Island for a week. The surcharging regulations do not go across international cards, and so you'll have a much higher cost of acceptance for an international card because those fees are going to be much higher. So again, that's something to have a look at. And
so they could pick a fee that they want to charge to cover the cost.
Correct.
Right.
So what you would do is, and again, you sit down with your acquirer and start to get to know your business better and go, okay, well, I know that I've got X number of international transactions. I did X number of transactions last year on international cards, and it cost me Y. So I'm going to work out, if someone comes in with an international card, I'm going to surcharge them this. Having some basis for all of your surcharge rates is highly beneficial because customers are becoming more savvy. It was a major complaint. It's a major complaint area for consumers. And again, as I stated in the last webinar, there were 6,500 submissions to the Financial Services Inquiry. And this is dealing with major issues such as mortgages with banks, what the amount of capital a bank has to have to operate in Australia, what superannuation advisors can do. So you get the idea of what they're working with in that space. 6,500 submissions, 5,000 of them about credit card surcharging. So having some basis and some information to make informed business decisions for which you can explain to your customer, if they so wish, is only going to strengthen your business and you'll have better relationships with your customers as a result.
Yeah, great. Really informative, Dean. Thank you. And then what about clarity? Do we as a business need to disclose what we're charging for the different cards?
Yeah, absolutely not at all. So when I say not at all, let's just start that a little bit again. You will need to disclose at a point to say that these are the surcharge costs, exactly like you do now. So a number of travel agency businesses will say, here is the final cost of your travel package, and if you choose to pay via a Visa card, it's this surcharge. If you decide to pay via a Amex, it's this. If you decide with Diners, it's this. That's still critical because you need, in terms of providing clear pricing to the consumer, which is an entirely different act, but still has huge penalties if you don't comply, is still relevant and is still current. So make sure you've got your surcharging rates up front, and the best way to do that is to go, here is the cost if you pay cash, here is the cost if you choose these payment options. Here is the cost of those. So having that there included, what you don't have to disclose to the consumer is the cost of your forward delivery risk insurance if you choose to have it, or your merchant service rate. You don't have to disclose that, you just have to disclose what your surcharge rate is. But if the ACCC does come knocking, you need to be able to disclose and demonstrate those costs.
Great. And I'm hoping I appropriately understand this question, but it's this particular gentleman uses a third-party facilitator which has the same rate for Visa and MasterCard but another rate for Amex. Do they as a business have any responsibility for what they charge the client?
You as the merchant are always responsible for what you charge the client. But first and foremost, it's your merchant facility, even it's your relationship with the payment facilitator, and so that's first and foremost. It will always be yours. So if you've got questions about what the payment facilitator is charging and how that's presented to you, make sure you sit down with them and get them to explain it to you. And secondly, and critically, make sure that you've got the annual statements from your payment facilitators to say these are the costs and this is what you can surcharge. And that cost of acceptance statement is going to be critical, and make sure you charge, and this is particularly the case for a payment facilitator because they can actually provide fraud prevention services and forward delivery risk insurance or mitigation strategies. It's much easier for those to do them than the big four banks. So just make sure you've got that information at hand. It's always your responsibility. You are the merchant. You are the person selling. The ACCC will not go to the payment facilitator. They will come to you.
Great, thank you. So this question is saying that, Pauline, you understand that you can bundle to the lowest surcharge. However, could you bundle for all but the debit cards, hence higher surcharge and not charge for the debit cards? That would keep, I think the answer to that question is no. If you're going to bundle, it needs to be for the lowest.
It's one of those things. It's going to come down to what your systems are able to identify. So if you can identify what a debit card looks like and recognise that all the time, and decide to continue, as I said in the presentation, most travel agencies currently do not have a surcharge for debit cards. We choose not to surcharge that because we can absorb those costs into our businesses, as do most retail outlets in Australia. But the reality is there's not too many terminals out there that can differentiate between a debit and a credit card. So you need to make sure, if you are going to have a surcharge, and because every transaction needs to comply, you need to make sure that you have the relevant checks and balances in place. So you can continue to have a business choice that you don't surcharge for a debit or prepaid card. That's fine, but just make sure that when you apply a surcharge to a credit card, you just need to be extra sure that it's not actually a debit card. And that's that's really critical. And again, shopping around and finding some independent help with that will allow you to strengthen your business and provide you a level of protection in regards to these regulations.
But adding to that, I don't, and Dean correct me, but if you choose not to charge for debit cards, you can't charge a higher amount for credit cards to make up the debit.
You can charge a higher rate for credit cards, but again, they're two totally different aspects. So you've got to look at, whereas in the past we saw all Visa and all MasterCard as one product, and we saw Amex as another product, and we saw Diners as another product, we saw FPOS as another product. In the new regulations, it breaks the two apart. So MasterCard debit is one product, Visa card debit is another product, MasterCard credit is a product, Visa credit is a product. So what you need to be able to do is, with that situation, you could say that for all debit cards, and typically they're going to be a Visa or a MasterCard debit card because they're not FPOS, you could say that we're not going to surcharge for that. That's fine. But we are going to apply a surcharge for MasterCard and Visa credit cards and have a single rate for credit cards. That's fine. That's 100% acceptable or good. But you can't, if someone comes in or pays over the phone and you haven't done the check and you charge them and they want to pay via a MasterCard, we need to make sure that it is what type of card that is, because if it's a debit card and you apply a credit card surcharge, so a credit card rate surcharge, you're in breach. So again, it's a very tricky area, and that's why, unless you can actually physically see the card and know whether it is a debit or credit card, I would thoroughly recommend finding online suppliers that have the instant recognition of what is a debit and a credit card. It's not an easy area, so hopefully that helps.
Yeah, because I think the question was, if you choose not to charge for one type, can you just add that percentage to the other card?
Yeah.
And that's a no.
The big thing they've tried to do in these new regulations is to stop the cross-pollination of cards. So there was what was happening is that people who had lows, who were paying on debit, were technically paying for people who had higher value cards, i.e. the card that has the most reward points. And so what they've done is to stop that from occurring in the issuing of cards, they've made it much harder to surcharge and much harder to accept different costs within that. So again, it's a complicated area. I hope that makes some sense for you.
And just one final thing, I think this is our last question for today to clarify. What happens when a client uses a debit card over the phone as a credit card and we currently charge the credit card surcharge, because otherwise they actually need to use their PIN?
Yeah, and look, and that's a really interesting point, and it's something that the regulations are silent on. The key thing to remember in all of this is that if it is a debit card, you need to charge a debit rate. If it is a credit card, you need to apply the credit card rate. You cannot, and again it goes to the same point that I was saying before, is that in a card not present environment or a tap and go, they all go through as credit transactions on your account, but for the consumer, it is 100% still a debit transaction. That's how they view it. That's why they've got that style of card. That's why they're choosing that payment option. So absolutely critical that when you're doing these things over the phone, that you're clear. And as I said, if it was my travel agency business, I probably would not be accepting manually entered cards. I'd be trying to find a payment facilitator that would allow me to send them a link to allow me to charge the relevant surcharge. And that's just a business decision which you guys will have to make independent within your business. And for some people, you'll continue to accept debit payments over the phone, and for others, you'll choose some different options. But again, there's no right or wrong element to this. It's whatever suits your business model. The only right or wrong is that you need to make sure you're always applying the correct surcharge rate for that payment type.
Yeah, thanks, Dean. And we've got a question here from Bryn with regard to numbers. Is there any correlation between the number type and quantity as to what type of card it actually is?
There is, but there's thousands of what they call bins, which is banking identification numbers. That's where your payment aggregators and your payment facilitators will come in extremely supportive of that. There's a number of businesses which have those instant recognitions. As I said, I'm not aware of any of the big four which have instant recognition of cards, but a lot of the payment facilitators actually update that on a daily basis, and there's always new bins coming online. So definitely talk to your payment facilitator. It's not something you could sit there and do. There's thousands and thousands of these.
It'll be a challenge in itself.
Complete challenge, and you'd spend more time trying to work out what type of card it is rather than doing what you guys are great at, which is selling travel.
Well, that's our last question for today. Thank you so much for joining us, and Dean, really informative webinar, so thank you for hosting it. I've just sent a message to everyone that if you have any questions, please email us at afta@afta.com.au. That's very confusing. Email afta@afta.com.au, and from tomorrow the webinar slides and presentation recording in full will be available at afta.com.au. Thank you for your time, everyone.